Hey, this is Rocky here again. Today is the 18th of July 2016, and this is a chart of the 20 plus year Treasury Bond ETF. And I thought I'd go through a quick analysis of this and see what the potential for this to move higher is, which means interest rates to go lower after the huge rally we've had in this market over the last few months. So you see here we go back to June last year, and this was a big low we put in, and the market rallied out of here. It was a bit of a messy rally, but it did go up fairly strongly, big gap up, and then we came back down here, had a pullback, and then away we went again. Now looking at this, it looks to me like we've had 3 5-wave sequences, which conclude a bigger 5-wave sequence. So we've got wave 1 here, wave 2, wave 3, wave 4, and wave 5. You can see I've taken the range from this low to this high, projected it from this low, and we've come up just short of our 100% of the previous range, and it's pulled back. Now it's going to be telling to see what happens after this, because we've come back fairly strongly here to just above 50% retracement of this last leg. But if this is a 5-wave sequence, a completed 5-wave sequence like I think it is, 1, 2, 3, 4, 5 there, then looking at what happens after 5-wave sequences in this market, we don't just continue to rally, we go down, we have this complex correction. Now if this is a completed 5-wave sequence on the big picture, then this is not going to go any higher, or it might go just slightly higher, but this is just about over. This rally in bonds, this decrease in interest rates looks to be just about over. So it's going to be interesting to see what happens here. After this high we had a quick sell-off, then we came up, made a lower high, and then we came back into this complex correction. It's had the quick sell-off. Now we'll see if we have this rally and make a lower high. If we make a lower high here, then this market could come right back down here, because we've got 1, 2, 3, 4, 5. If that's a completed 5-wave structure, then this is over. It may not be, we could go higher, who knows, time will tell. So we'll see what happens here. If it rallies off this 20 period moving average and makes a new high, we're off to the races. If it rallies up here and starts to struggle at around 50% or 618, which is what it did here, you see it came down, went up to just over 618, and then came down and couldn't take that out for a couple of months. If this is the case, if this is wave 1, 2, 3, 4, and 5 is longer than 3, which is okay, it's got these gaps and it's just extended itself. So an extended 5th wave at the end of a 5-wave structure is classic of an exhaustion in a market. Then we've ended here with an island reversal. See, we've gapped up, had this island of price up here, we've gapped back down, and now we're down here. There's a lot of reasons to think this rally in bonds is over. Time will tell. But if it is over, that means these interest rates are going to rise and bond prices are going to fall. And because people are so long this market, this has been a one-way trade for a lot of people. A lot of people have missed it, and that's shown by this panic to get in up here. People have been buying into this last leg, if it's the last leg, trying to get along this market. And that's what usually happens at tops. So it's very interesting to watch what goes on here. I certainly wouldn't be touching this with a barge pole right now, because it just looks to me like it's overblown. Who knows, it could just keep going higher. Eventually it's going to exhaust itself. Interest rates can only go so low, and then we're going to have pension funds and all of the big funds that have gone for this safety, this perceived safety of US Treasury bonds, panicking, trying to get back out. So this just looks to me like this overblown bubble, and we'll have to see what happens in the future, but I certainly wouldn't want to be long this market from these levels. So that's the way I look at that. Hope it helps. I wish you all the best with your trading, and I'll talk with you in the next video.